Good afternoon. This is Alan Heffling from Comstock Investments. I'm here to give a little bit of webinar on the crop conditions report, not the conditions, I guess, the supply and demand and production report today. There was some surprises today. Surprise, surprise, surprise. We'll get right into it now. Let's see here. I want to share. There we go. I want to go right there. Okay. Let's see here. Okay. Gets there with me. Okay. There we go. Okay. Once again, this is the August 10th, 2017 supply and demand report and production. And there was some surprises today. We'll get right to it. As you can see, the circled numbers there are the biggest surprises, and that's why we had the day we had today. The yield in the corn, USDA come in at 169.5. As you can see, the average trade guess was running right around 165.6. So big number for the corn. And we'll see what happens here later on down the road in a few days. The biggest shock came on the bean side. Instead of lowering the bushels on bean production, they actually raised it 1.4 bushels to 49.4. That was 2 more bushels than the average trade guess was, and that's why we had beans down 30 cents today. They left the acres alone, just messed with the production side of it. The wheat market, we had all wheat came in a little bit bigger than the average trade guess. Winter wheat, a little bit bigger. Hard wheat, soft, as you can see the numbers. The durum wheat, as you can see, last year we were at 104. This year we're at 51. And that's basically because of the drought in Dakotas and in parts of Minnesota and in Montana. But pretty close to where the trade guess was on the wheat. But the wheat also had an ugly day today also. This is the ending stocks. The ending stocks for this year, they left the corn the same. The average trade guess was looking for a little bit of an increase, but with better exports and usage, they kept it the same here. And here's the bullish side of things here this morning. They lowered the soybean carryover 50 or 40 million bushels from the July report. And as you can see, the average trade guess was 401. So there was some bullish aspects of the bean report today, but it wasn't enough to keep us from falling out of bed per se. Then you bring in them ending inventories into the beginning inventories, and you put the new production in. And as you can see, our carryover for corn dropped from last month about 52 million bushels. Average trade guess was a little bit more because, or a little bit less, obviously, because they were looking for a decrease of production. They didn't get it. So the corn number was constructive, but yet quite a bit bigger, about 270 million bushels more than the average trade guess. And obviously the soybean number is going to be big just because with the bigger production. One thing about the ending soybean stocks, they added 118 million to production, but they only increased the carryover by 15 million. So they got some pretty good numbers in there for usage next year. Time will tell how it pans out. But the 475 million projected carryover for a year from now, I wouldn't call it friendly, but it surely could have been a lot more negative given the big production number that we got this today. World oil stocks, or excuse me, world grain and oil seed stocks, as you can see, we are gradually grinding down the world wheat stocks. The average trade guess was 258.4. The August came in at actually at 242.8. So as you can see there, that was for this coming year, or this present year, and next year actually our stocks grew a little bit from the August estimates. Corn, there too, the world stocks for this ending marketing year, a little bit lower than the average trade guest thought. But then, as you can see, we go into the 2017-2000 marketing year. We are quite a bit lower than last year. That's mainly due because of lower acres and lower yield. In soybeans, we actually growing stocks from a year ago. And that's basically because of the big South American crop and, surprise, surprise, the 49.4 bushel yield here in the States, which is yet to be seen. But the world ending stocks, we are lowering the corn stocks a little bit this year, and we're also lowering the wheat stocks. But excuse me, we're actually raising the wheat stocks some from last year. So surprisingly, the wheat numbers are negative also. Okay, U.S. wheat production, it just kind of go down the line here. A certain type of wheat, total winter wheat, today's estimates, you can see that a little bit bigger than the average trade guess, and a little bit bigger than the July report. All wheat, however, is down from the July report. But still, we got big numbers coming at us on the wheat. It's going to take a little bit of more time to chew through the old wheat stocks. Obviously, the durum wheat was somewhat positive, but I think that was all built into the market. And we got some later time coming down the road where we may go back and retest the highs. But for right now, the wheat market, and well, the whole grain complex is on the defensive position here. As you can see, it would just kind of go down the line here. The harvested bushels rate, you can see last year, the 52. This year, they're 49.4, but yet they raised it. Just do the math down here, and that's how they come up with the supply ending stocks for next year. So, like I said before, the ending stocks for next year, U.S. ending stocks for next year could have been a heck of a lot worse with the up in production numbers. Hopefully, this will be the biggest number we see all year, but we still have quite a bit of weather to get through to get that 49.4 bushels. Wheat, just kind of the supply and demand table here. Beginning stocks. You can see the beginning stocks start out with a big number. Production, quite a bit down from a year ago. But once again, the old crop supply is just putting a lid on any type of rally right now. We did have a weather rally in wheat. It's over with. Now we got to chew through the old crop wheat and deal with the new crop that's sitting out there also. Ending stocks, like I said, grew from the previous report. So we're sitting basically at 14, or as you can see the numbers there. So, okay, go on to the next one. Here's the corn number. You can see they lowered the yield, obviously, a little over a bushel. Production is down 102. Do the math with the rest of the things, as you can see there, and we're losing or dropping the carryover from the month ago, 52 million bushels. In the corn market, we were down 15 cents today at one time. The numbers, if you just looked at the numbers of the ending stocks, it's constructive. We're not getting bigger, we're getting smaller. But the biggest thing that we're dealing with is a 2.37 ending carryover for this current marketing year. And that's going to be a weight on the market. It has been a weight on the market. But I think they overdid the corn market today. I really do. All right, the wheat revisions. I think we've seen that here. The wheat, as you can see, ending stocks a year ago was huge. They're still big. There's no question about it. But we're going in the right direction with the stocks. So we'll just see how it plays out. But I am friendly wheat later on in the marketing year. But for right now, we got to get through the harvest and get through some of the usage problems that we got going on. All right, the chart. I got some charts here. This is a December corn chart. You can see this is a day chart. You can see what happened today. Where my arrow is, this is our June low. Our June low was 374. You can see we closed below it, closed at 371. I'm concerned about the way December corn chart. It looks really ugly tonight. I think there's some downward pressure yet. But I want you to look at this chart, because the next chart's a continuation chart. And there's a little bit of positive news, I guess you could call it. But we'll go back and forth here. But once again, December corn took out June lows. But the continuation chart, which is September corn, you can see this is a weekly chart. Goes back 2016 there. April or February 2000, actually January 2016. And you can see today's break in the corn market did not take out the June low in the continuation chart. Now, this could just be a coincidence, but you can look at go back here. You can go back in March of this year, in May and April. This 355 to 356 area appears to be solid support. And I still think that the corn market has a chance to hold this level. We'll have to see. The thing that would work the best tonight, it's opening, is if we gapped higher opening to get away from this trend line here. But if you want to take a positive today, as long as we don't make a new low in the continuation chart, we don't do a lot of damage. If, however, we break through this and close below this red line, 357, 356 area, there isn't much support below the market. We probably have a low around 332 would be my next target if we break through this line here. So once again, we're at crucial support in the continuation chart. December corn did fall below that trend line or that support line. I could see December corn falling possibly back down into the 363 area. Contract low, I believe, is right around 358. I do think contract lows will hold in the corn. So if I was to trade the grain market here, I would be looking at going out to July of 18 or December of 18. If you just want to do the futures, I'd be buying futures. If you want to use a call, I'd be going out and buying a $4 or a $4.10 July corn call. They're going to cost, between 20 and 30 cents. Depends on what strike price you use. But I am friendly to the corn market. After we get through this sell-off today, I think the yield will eventually be below 165, but it may take another report or two, probably the October report, before we start realizing that the corn crop is hurt worse than what the USDA said today. So I want to go to a soybean chart. This is a November days chart for the November beans. You can see we had an outside day down, which means we went above yesterday's high, and we traded below yesterday's low, and we closed well below yesterday's low. So this is a negative chart formation. I do not see much support in the beans here. Basically, next support might be a little bit around 930 area, 932, this low right here. But good support lies down around our June low of 903, 907 area. So I'm still somewhat negative to beans. I'm going to show you a continuation chart here. This is a monthly soybean continuation chart. So we haven't taken out the June low yet on the continuation chart. We're trading August beans right now. That's the month that is lead month. As you can see, there isn't much support until we get down to our June lows, and that's right around that 906 area. If 906 gives away, believe it or not, next support basically is about 50 cents lower than that, right around 860 to 850. I don't know what to think if we can get to that level or not. Obviously, we don't want to get there. You can see the 906, $9 area is somewhat solid support. You go back to 2009, 2010. We had some support around that $9 area. When we sold off in 2014, the 906 area held it. And last summer, we broke through it, and we were about 6-7 months below that. But so far, that's held. And do I think it's going to hold this time? Yes, I do. We might go down and challenge that, but I don't think we're going to make contract lows in the beans. I think the bean crop is hurt, but how bad yet, I don't know. But I think beans have a little ways to go before I would look at buying them. If I did, I'd go out to either the January or March contract and buy futures right around that 910 area, 920 area. You know, if November beans got down to 910, $9 area, I'd go out and buy the January at the market. So, all right, this is a wheat, December wheat dailies. You can see the weather rally we had. We were basically back down to where we started the wheat market before we actually took off on the weather market. This is somewhat discouraging. I thought this area of consolidation around that 480 to 490 area would hold, and we bounced off of that, but we didn't. We failed, and I think we're going to have to go sideways a little while longer in this wheat market before we have any sizable rally. We got to work through the old crop supply yet. We got to work through the new crop, and you know, we don't like to wish people bad things, but we need some production problems someplace else in the world. Otherwise, I could see us go down back here and consolidate around this, you know, 470 area to those 450 area. We really don't want to go much lower than that. So this is a continuation wheat market. This is a weekly chart. As you can see, the weather rally is over with. There's nothing left of it. Once again, we hope this 440 area holds in this continuation chart. Otherwise, you can't rule out this year's low, this $4 area. I don't think we'll get that ugly, but you know, I've seen stranger things happen. So how I would play the wheat market? Well, we got long December wheat or actually December of Minneapolis wheat. We got long, I believe it was around 530 or yeah, 530. We got stopped out today. Took a little bit of a loss there, but we'll be back in going along the wheat market. So just be patient with us, and we'll make some records there too. Okay, the chart of the day is the S&P 500 chart. This is the E-mini. As you can see, today was kind of an ugly day also in the S&P. We haven't been this low in the S&P chart for about a month now. We broke through some of the moving averages that I track. The 50-day, 23, and 30, all three of them, they broke through. Do I think this is a one-day wonder? I don't know. I think there's more to it than a one-day wonder. I'll show you why. This is the monthly S&P chart. We have been on a very nice bull market basically since the spring of 2009. We had some hiccups along the way, but it's been a good bull market here. And we're probably running out of steam to where we need some type of a correction. I don't know if the bull market is over with yet. This is a monthly chart. We still have a higher monthly high, and so far we have a higher monthly low, but we're only halfway through August. But if I was to play the S&P, I'd rally, if we could rally back to 2460, 2465, I'd probably short the December S&P and use a stop above yesterday's high someplace. You know, give it 20, 30 points on a stop. But I'm looking for some type of a correction. You know, there should be solid support, around 2100. You know, maybe 2050. I don't know if we can fall that far. Obviously, we don't want to. Otherwise, we'd probably be in a bear market. 2200 should be some solid support. But I'm looking for a correction in the S&P. How deep it goes is yet to be seen. But I am a seller on rallies. So that's all I have today. Once again, here's our information. If you have any questions with this webinar or you want to open an account with us or just talk with one of the brokers, we'd be glad to do that for you. There's a lot of information that was released today. I just want to tell you that the market is always right. Even though you may not agree with the USDA today, the market is right. You don't want to fight it. Do I think that we're going higher? Yes, it's a timing issue here, people. I think we got a lot of old crop corn and wheat to work through. I know you want it to happen today, but it may take us through the rest of the year before we have any type of a sizable rally coming into this grain market. Obviously, we got the half a month of August left for weather. Today, there was a hint of some heat and some dryness coming back into the long-range forecast. If that happens, we may put a short-term bottom in this grain, and we might try to go back and take out today's high in all three grains. But I think it's going to be difficult to make any new highs here. We're pretty close to contract lows in corn, and I'd be buying grain at them levels, or even tonight. But you may have to margin a little bit. But like I said, any questions, let me know. Just appreciate your business in the past and hope we can help you in the future. So signing out from Royal, Iowa is Alan Heffling, and hope you have a good evening. Thank you.